It's about that time of day again. Welcome back to your nightly newsletter, boys and girls. Joseph James here. It's Monday evening, August 15th, 2016. We're back to the action once again this third week of August. And with the kids headed back to school, we're seeing more volume, more volatility, and of course, more reliable trading opportunities going into tomorrow's session. Crude oil, S&P, and euro are bullish, while gold is range-bound, but might be setting up for a collapse back to last week's low with a long-term bear flag. No matter what happens tomorrow, it's sure to give us plenty of reliable opportunities, and I'm excited to see you guys tomorrow with us in our live trade room, and of course, another great week ahead. Got a great newsletter for you guys tonight. Before we jump into our charts, though, I do want to remind you the only place to watch the full-length version of this video is here on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry, there's a link in the description of the YouTube video. Follow that link, come join me here on the blog for the full-length version, and while you're here watching the full-length version, don't forget to grab your free pass. If you're not a member here at School of Trade, I've got a free pass for you to come out and join me as a guest in our trade room this week. Also, please remember to join the mailing list. I'll send you an email every evening when the nightly newsletter is ready to go live. Below the video, you can download all the charts that you see me using in tonight's video and have those charts ready for your trading tomorrow. And as I always remind you guys, you'll learn more with me in 1 week on my free trial than you will anywhere else on the interwebs. Find that free trial button on the right-hand side of the website. And remember, I'm always here to help. If you need any help along the way, hit me up on the live support button. It's on the right-hand side of our blog, and it's also on the homepage of our website. Hope you guys had a great weekend out there. Boy, kids are going back to school. Volume's getting back. Starting to kick this baby into high gear. Remember, the fall season, overall, the months, the second half of August, September, October, November, December, February, and the first half of March are always the best time of the year to be traders. I'm excited to have you guys with me here. Hope you guys had a great weekend and get a big week ahead of us here. Now, before we jump into charts, though, I do want to remind you of tomorrow's schedule. Nothing new, nothing big coming out from the Asian session overnight. We get some meeting minutes from the Royal Bank of Australia tonight at 9:30 p.m. Eastern Time. I don't expect that to be much of a market mover for tomorrow. But, of course, going to Tuesday, August the 16th, we get a bunch of news coming out tomorrow morning from Great Britain, Germany, and the EU tomorrow before we go into the U.S. session. Don't forget, we'll be in the chat room tomorrow morning for the London session here at schooloftrade.com. Right, we have a chat room. London session opens up at 3 a.m. Eastern Time. So be aware, if you trade in the London session, 4:30 a.m., 5 a.m., those are the big news events tomorrow morning during the London session, of course. Then we go into the U.S. session tomorrow morning at 8 a.m., and pretty much all we have is tomorrow morning's 8:30 and 9:15 a.m. news reports. So a couple big reports there at 8:30 tomorrow morning, and of course 9:15, of course, that industrial production number for Tuesday, the 16th of the month of August. We'll talk more about tomorrow evening. No major news tomorrow evening. So really tomorrow morning, going to be early morning, 4:35 a.m. Eastern Time in London, and then 8:30 to 9:15 news right tomorrow morning in the U.S. session. Again, London session opens up at 3 a.m. Eastern Time. Come join us in the chat room as an advanced member or in the trade room, which opens up at 8 a.m. Eastern Time tomorrow morning. Of course, live in real time with all of our advanced members. All righty, that does it for the news for tonight and tomorrow. Let's get moving here and jump into our charts here. We'll go crude, S&P, gold, and then euro. Crude is bullish and trying to finish the measured move target up to $46 a barrel tomorrow. The buyers have control and will be looking for opportunities to buy pullbacks with new higher highs and buy failures at previous levels of support. The most recent bear candle will likely spook most buyers from buying this pullback. So the more reliable entry will be the second time the buyers try. And if price moves lower, we know that buyers will be looking for seller failures at the low of the channel with a target back up to the high. Sellers they got to stay patient. Sellers really need to see a strong and successful breakout pullback below the channel with a target down at the battle zone around that 45.16 tomorrow. But we can safely assume that any deep pullback on oil right now will be seen as nothing more than a buying opportunity, a deep buying opportunity, right, for most traders tomorrow. As I said, you can see on this chart, buyers are in full control, right? There is no doubt about that. We get a bull spiking channel, right? The bull spiking channel tells us to expect channel rotation. from the high to the low to the high. So right now, right, we're definitely anticipating rotation up to finish off that measured move. It's the end of the day. Will we get that before we pull back? We won't really know yet. We also know that that bull spiking channel gives us a correction zone. That correction zone, 45.05 to 44.73. That, in my opinion, is the line in the sand as far as how deep this thing can pull back tomorrow as it entices more long-term buyers. You know, keep in mind, I don't want to think like this too much, but you know, keep in mind we've been a little bit lofty the past few days. Thursday was a runaway day. Friday was very bullish as well. Here we are on Monday, big gap up over the weekend. It pulled back a little bit and then shot higher again. This has been a pretty bullish market. Again, I can't really use that as actionable information, but it wouldn't surprise me if we see a nice deep pullback because buyers appear to have taken their money and left the building, right? That's what that big red candle tells me after we achieve that double up. So again, just kind of speculating here. Wouldn't be surprised if we do see a significant pullback tomorrow, right? And again, that correction zone is waiting down here at 45.05 for the long-term buyers, right? Those swing buyers to capitalize on a nice deep pullback so they can buy cheap. Now, with that said, what are we looking for in the short term? Well, first of all, under normal conditions, this pullback to the moving average would quickly be bought. But there are two reasons why I would imagine these buyers are going to be a little bit spooked by this. First of all, the double up. The double up is resistance at 45.92, and it's staring you right in the face, right? It's basically begging, try me, right? Try buying through this resistance because you know the target right now is the measured move. The ultimate target for the buyers ultimately right now is to get to the high of that channel and to get that measured move target accomplished. We've already rotated from low to high, high to low, low to high, high to low, right? And now we're trying to go from that low back up to that high, finish off the measured move, finish off the channel rotation. You know, but again, it looks like those buyers have taken their profit on the day and they'll come back again tomorrow. So first thing is you've got resistance. It's right there. 45.92 is not a lot of very large lot traders who are going to want to buy into that resistance. The big deal though is look at the size of this red candle, right? Do you want to buy that pullback? Almost identical to what we saw back here, right, where you've got a new higher high, a pullback on a really sharp pullback, right, real strong red candle. It's not going to be the first one that usually goes because that's not going to be able to, that strong of a pullback is going to spook those buyers, so it'll be that second one that usually goes. We saw a good example of that one, last week in the newsletter. I can't recall which market it was, but again, big, strong pullback here, so it's probably not going to be the first one. It'll be the second one, right, that tries to go just because of the overall strength of that bear pullback. And again, with not much room to go, buyers will be a little bit cautious on that as it goes higher. Keep in mind, though, the measured move ultimately is the target. And then from there, it'll have to be a really strong breakout pullback and holding that pullback above the measured move, or we'll look for that two-legged correction back to an area of support and then look to buy it again if we do get that measured move accomplished before we get the pullback. If we do get the pullback here, then obviously we're looking great here for enough room. So I would expect to see here sellers trying to sell. Let's do that again. Sellers trying to sell the pullback to the moving average. Buyers, of course, here will be looking for them to fail and to buy that back up. That would really be the ideal scenario here for a buyer right now. That way they're not buying into that red candle or into that overhead area of resistance. Again, I'm not saying that it can't go up right now. I'm just saying with what we see right now, it is more likely that professional buyers are going to be a little bit hesitant, right, to be the first one in on this next green candle here, all right? And we'll see how it plays out from there. Now, as it goes lower here, again, buyers, I don't think I'm too comfortable buying the first one. The second one, though, a lot more reliable. We'll wait for the proper trigger candle there. As the price goes lower, buyers looking for a seller failure. This is where it gets a little bit interesting, though, for the sellers. It's clearly a clearly a bull market here, right? It's very, very easy to say it's a bull market. So in order for the sellers to really get some confidence here, the way that I always describe it is we need to see a real strong breakout and then a solid pullback here. That breakdown needs to give the buyers reason to be scared. It also needs to create some separation below the moving average to give the sellers some confidence to sell it back down. That's going to really be a big variable for the sellers here, because if they can't get that, again, show me some strength, right? Give me a nice strong move lower. That strong move lower is twofold. It's going to tell the buyers, back off. I'm going to go for another leg here, so you don't want to be on the wrong side of this, right? At the same time, it's going to give those sellers a chance to sell that next pullback. That's what sellers really need to focus on, is getting a nice strong push lower here. Because if they don't, they're not going to get the buyers off their back, and the buyers are just going to keep looking for opportunities here to keep buying it right back up. Now, with that said, don't forget, we then go into this area down here. We have to assume long-term buyers are going to be looking for that market to come right back up. So with that said, think of a scenario like this, right? Strong breakdown, back off for the buyers, give the sellers a chance to sell it lower. Then, of course, we see this area here where long-term buyers come in, breakout, pullback, and that's where the bulls will then be looking for that next opportunity back in. So selling on the way down, again, I am not saying that selling is the most reliable. I'm saying this is what a seller will be looking for tomorrow in the short term. Just be aware, though, when you get down to this 45 even area, we have to expect there are going to be some long-term buyers. They'll be entering the market. From there, I'll be looking for that buy back up, right? Get back above that moving average, hold the pullback, or a strong breakdown. That's the key word here. Again, it's going to really have to be strong, hold that pullback, get below that battle zone, get below that correction zone, and give us a chance here to sell. Again, the key to being a seller tomorrow is doing it on strength, because you have to create some separation. Get below that moving average, create some separation, really just tell the buyers to back off and give those sellers some breathing room to get this price going lower. All right, guys, pretty easy from here. And I think really the big variable is going to be, what if it just runs higher here? If it runs higher, be very careful just buying it at that measured move. When it runs higher through a measured move, I want to see this thing really explode through it. Real strong green candles, get some good separation, and then you'll be able to buy that. Almost identical we saw on Friday, right? If you go back and look at Friday morning, late, middle to late Friday morning, that's exactly what we had happen, right? Where it kind of busted through the highs, pulled back and held. That's what we need to see if it doesn't go higher here without pulling back tomorrow. Get a great plan there for crude. Relatively simple idea, right? It's a pretty easy trend. We just got to stay patient and see what we get here in the next few hours. How about the S&P? Well, it started the session bullish, but it's now bearish in the short term after the buyers appear to have given up completely trying to finish off that measured move higher. The sellers have control, right? So bears have control right now. They made their lower low. They held their pullback. And with such a strong push lower, we assume the next pullback to the moving average will be sold eventually, and it will get a second leg down. It may be a whole symmetrical leg down. It may just be a retest of the low. It's always a little bit difficult to tell. But when you see a real strong move like this, undoubtedly here, buyers trying once, twice, three times. They just gave up on this thing. It's pretty obvious. With that moving average, though, we expect to see that pullback, right? We expect to see, if not the first attempt, the second attempt, but it will likely make a second leg lower. Now, that second leg lower, it may be a symmetrical second leg, right? And completely be a symmetrical second leg, or it may just be a move back down to the low, and then that, of course, might get bought up from there. But the reality is that with that strength of that move going lower right now, we have to assume buyers aren't going to want to buy it. Just like we talked about the crude oil, they're not going to want to be the first one to buy this market. And at the same time, it gives the sellers reason, right? It gives them some sort of excuse to sell that pullback to the moving average. And of course, it all depends on what it looks like when it pulls back to that moving average, because as we can see right now, it is quite a bit of separation below the moving average right now. So sellers will be looking for opportunities at the moving average for both continuation setups as well as buyer failures if price can slip back above that moving average. Although long-term buyers may be scaling into this market on the pullback, remember, this has been a 7-year bull market here. So every time it gives us a nice deep pullback, we have to assume that long-term buyers